Recently, we introduced a new series we call What's New in Insurance. In the first segment of What's New, Ty Sagalow, president of Innovation Insurance Group, presented Bitcoins as an emerging cyber risk now being covered by a few insurance carriers. In part two of his discussion on Bitcoins, Ty reviews the growing legitimacy of the peer-to-peer payment system and the types of risks that can be associated with Bitcoins.
As of today, there is approximately $8 billion worth of Bitcoins somewhere around the world. You can buy an Amazon gift certificate with Bitcoins. You could buy electronics with Bitcoins. And Expedia.com recently announced you can rent a hotel room with Bitcoins. But does the holding and storing of Bitcoin have risk? And what does that risk mean for the insurance industry? That's the subject matter of today's talk. The short answer, of course, is yes, and certain of those risks might be subject matters of the insurance industry to solve, and others may not. Let's talk quickly about three. First risk is price fluctuation. Now, the price of a Bitcoin started this year at about $100, and it's about $600 today. And 2 years ago, it was $10. So the investing at Bitcoins is an interesting endeavor, and not for the faint of heart. Is the management of that price fluctuation a subject matter of the insurance industry? I think not. Maybe investor advisors will come up with hedges or collars, but I wouldn't recommend the insurance industry insure that risk. The second is mismanagement. Like many other small companies, Bitcoin companies on occasion go out of business, even ones that are backed by venture capitalists. Of course, the biggest example of this is Mt. Gox, that went bankrupt in February of earlier this year. However, do not fear too much if you're a shareholder of that company, because it was recently announced that it would sell its company in bankruptcy to Brooke Pierce. Some of you might remember is his child actor from the Mighty Duck series, together with a venture capitalist, not at 100 cents on the dollar. But the issue for the insurance industry is we're well familiar with mismanagement, and we're well familiar with companies that are of a higher risk because of the industries they're in. As a D&O carrier and a D&O underwriter, I would deal with these issues every single day. So I think that the Bitcoin community should and can buy D&O insurance. And if you're a director or officer of that community, I would apply for D&O insurance, and just realize you're going to pay a higher rate than the neighborhood pizza shop. The third risk is perhaps the most interesting for the insurance industry, and that's Bitcoin theft insurance. Now, recently, Great American and some Lloyd's of London syndicates announced the creation of a Bitcoin theft policy. Some entered the market, and some apparently have exited the market. But the issue is an interesting one. Bitcoins can be stored in three different ways. First way is online, and therefore it's stored in the same way as Social Security number or of any other personal identifying information. Is simply a computer that's hooked up to the internet and to a network. That should be able to be evaluated as any other cyber risk by the cyber underwriters in the industry. Second is that it can be stored on your computer or on your desktop, not stored online per se, and that the security of the file stored on your desktop depends upon how secure your computer is. The third is on paper. Because reality, when you are storing at Bitcoin, you're really storing the private key, which is a long series of numbers. And those numbers can be written down or printed out, and they can be put in an envelope. You can store that envelope any way you want. Safe deposit box, in a mountain, wherever you want it to be. Now, the private key that's in this envelope is worth about $5. So I'm going to store it on my desk. However you look at it, though, Bitcoin theft insurance, I think, is a proper matter of the cyber insurance industry, perhaps being helped with their colleagues in the fidelity industry for things like storing envelopes in safe deposit boxes. But it's an opportunity that I think is too big to ignore. For today, this is Ty Sagalow in What's New in Insurance.
For more information on Bitcoin risk and other insurance innovations, visit the IIG website or the RIN TV On Demand Library.